Hello faculty, thank you for giving me a chance to present my work. The research by the name says sailing safely in the Indian market is targeted for Indian stock market and for the common people looking for business opportunity. Here since the emphasis is on the intraday trading. Intraday trading is basically a solution for daily realization of returns through buying and selling within a range in the same day itself. The question here is if intraday trading can become a business model with stable returns. Here we have a few perceptions restraining people from opting this as a business. For those people believe it to be as good as gambling, where only affluent people can make good margins by investing in bigger lot sizes. For a commoner, it is hard to understand the technical terms and have a dependency on broker to select or suggest stocks for them. To contradict this perception, the research explores if simpler models can support stable positive returns if the margins follow a specific range. This study aims to provide an end-to-end automated proof of concept for intraday trading as a mainstream business with stable returns or stable positive returns. To achieve this, the objectives are aligned for analysis of stocks, selection of stock, finding optimal values to buy and selling bids, and finally automating this entire process to run and evaluate the pseudo trading across weeks. There have been several researches on stock markets across globe, but most of them were performed on long-term investments. Only 50% of the studies were done on trading. That too in the context of long-term investments. If we see granularity, there are only 25% of the studies done on intraday trading. And if look deeper, there are only 1% of studies that are done on the intraday trading within Indian stock market. We did some analysis on the analysis of margin returns. It has been realized that margin returns are falling into normal distribution, and most of the observations remain in the operating range, supporting the stability of trading in these stocks. The current implementation, there are four modules: analyzer, which calculates the margin returns and overall growth within the sliding window. The second is a portfolio module, which takes top 10 performing stocks based on the budget, creates a daily portfolio calculating the buy and sell bids using the IQR range applied on the last day's average price of the stock. These modules are looped across days by the daily trading module. The output of the daily trading module is utilized by positions manager for maintaining the daily open position and the budget consolidation for the next day. The closed positions are then summarized for calculating the returns across daily trades. Daily trades have been clicked around and sliding windows, budget, and distinct portfolios. The best configuration observed was with a sliding window of 20 days and a budget of 200K, giving returns of about 8.31%, which was the maximum returns observed in the entire research. You can see the realized returns in the graph as well. So, uh, Realized returns, as can be seen in the graph, superseded the index returns with no downtime as the index reports. With the evaluated over several budgets, returns are stable, and we can conclude that sailing safely in Indian stock market using AIML is achievable. So, since secondary revenues, there were few limitations like limited stocks in the pool and the portfolio and pseudo trading, which can be addressed further by integrating these modules through live stock terminals. Trading can be linked with the daily stock trading module to process real-time bids. The stock data integrations can be done to fetch live stock data for sliding window analysis. So these all changes can be done in the future researches.